Hello, and welcome to another episode of the Market Snapshot series. My name is Rufas Kamau, Markets Analyst at FX Pesa. So feel welcome to the session. And as you all know, on the Market Snapshot series, we basically cover what happened yesterday, what we're expecting to be happening in the markets today. And of course, we do some good technical analysis to try and understand the key price movements for the day. So let's get started. Once you join in, kindly say hi on the live comment section, and this will confirm that everything is working just fine. So hello, I'm seeing Young CEOs Kenya already in the session. Thank you for joining. So I'll be starting right away. I'll be starting by focusing on what happened yesterday. Then once you get through that, then we go on to what we're expecting to be happening in the markets later in the day. So hello, Richie official, there's Malombe, Roslyn, DNC, Edwin, and Kevin. Thank you guys for joining the session. So I'll be starting with the economic calendar. So yesterday was quite a beautiful day. First things first, we saw the official cash rate for New Zealand being maintained at 5.5%. And of course, we saw the monetary policy statement where the Reserve Bank of New Zealand decided that it's currently a very restrictive level, having interest rates at 5.5%. And with these interest rates at this level, they expect inflation to continue dropping towards their target, which is between 1% and 3%. So these raised concerns that potentially this could be the top of the Reserve Bank of New Zealand rate hike cycle. They're not looking to do any more rate hikes unless there's data showing very strong evidence of resilient inflation. In that case, they could continue tightening policy. So as per now, the bottom line or the baseline basically indicates that the Reserve Bank of New Zealand is not going for any other rate hikes. So UK CPI, or basically the consumer price index, came in at 6.8%. This was slightly higher than the expectation, but it basically shows that inflation is moving according to the Bank of England expectations, further back downwards, but still quite a distant away from the target of 2%. So from the announcement, we saw the pound continuing to rise against the dollar, among other pairs. And this indicated the market basically calling the bluff on the Bank of England, basically telling the Bank of England that you are not doing enough to control inflation. So even though the Bank of England has been hiking interest rates, inflation is still significantly higher than other G7 economies. And this is quite becoming quite a challenge. So for core CPI, it's still at a multi-decade high of 6.9%, which was the same reading as the previous month, but at the same time, higher than the expectation. So in this case, we saw the pound continuing to gain against other currencies. So later on, we had the premium news for the day, which was the FOMC meeting minutes, which are usually released 2 weeks after the event. So what we saw with the FOMC meeting minutes is that there's a divide within the Fed. Some members, that is 2 members, were considering holding rates level. The other members voted for a stronger rate hike. So that's why we saw a 25 basis point hike during the meeting. So as a result of that, diving deeper into the minutes, we saw 2 key concerns happening with the FOMC meeting minutes. So the first concern was that some members thought that the Fed is over-tightening policy, and this could lead to a collapse of the economy, and this is quite challenging. The other key concern is that there is elevated higher inflation risks. So even though the Fed had done sufficiently well, that is continuing to hike interest rates since March last year, from literally 0.1% to the current level of 5.5%, we also experienced inflation dropping month over month. So consequently, for 12 months, from 9.1% in June last year to 3.0% last month. But then from the inflation report that we got last week, inflation spiked for the first time to 3.2% from a previous reading of 3.0%. So now that inflation is spiking higher, it means that the 7 Fed members were right, and there could be some increased pressure on inflation to move back higher, maybe a second wave. And this basically raised concerns that the Fed may have to go for another interest rate hike. So from what we saw with the FedWatch tool, which basically measures the Fed futures in an attempt to measure whether the Fed will go for another interest rate hike, we know the next meeting is in September, that is 34 days from today. The percentage probability that the Fed would go for another rate hike was around 9% yesterday. But then after the report, that is the FOMC meeting minutes, we saw this percentage rising to 13.5%. And now we could be seeing this continuing to rise, especially with more economic data incoming in the US. So there's still quite a huge consensus that the Fed may continue holding interest rates at the current level, which is between 5.25% and 5.50%. And the probability is about 86.5%. However, from the last Fed meeting, the Fed basically said that it's changing its approach to a data-dependent approach. So every data that comes in basically is very important to that conclusion that the Fed will use to make a decision on its September meeting. So while the Fed futures indicate a very strong consensus that the Fed will hold rates level at that level, then there's still this curve changing. So some few weeks ago, it was around 22%, went all the way down to 9%, and now it's rising again as more data is coming, basically indicating that the Fed is being pressured to hike interest rates. So going forward, there's more data points that we'll be expecting. One has already happened early this morning, and this is the Australian jobs data. So the unemployment change, which is basically the number of new jobs created within the last 1 month, was down negative 14.6 thousand, meaning that it's more people who lost jobs rather than the economy creating jobs, meaning that the job market conditions are softening. So from the previous reading of that 1.6K, meaning that in June, the Australian economy created 31.6 thousand jobs. In July, the economy had a net negative, meaning that more people lost jobs. Then the unemployment rate is on the rise from a previous reading of 3.5% to 3.7%, and the expectation was 3.6%, which is well consistent with what the Reserve Bank of Australia is looking to achieve. So for today, going forward, we have trade balance data where we expect a good positive number coming from the Eurozone at midday. We also had the trade balance data coming in from Japan. Previous reading negative 0.54 trillion. These worsened to negative 0.56 trillion. We expected a smaller number or some form of improvement in Japan, but we didn't get to see this. Core machinery orders also slowed down to 2.7%, but still an improvement from the previous reading of negative 7.6%. So there's an improvement in core machinery orders in Japan, but this was slower than the expected 3.6%. So most important news for the day will be the US weekly unemployment claims. So in the previous reading, we had 248K. We're expecting this number to drop to 240K. So the number dropping basically means tighter job market conditions, which is basically not consistent with what the Fed is looking to achieve. So if we get to see 240K or even a lower number, then this will add pressure on the Fed to keep hiking interest rates, which would be positive for the dollar. On the other hand, a larger than expected unemployment claims would mean that the job market conditions are softening. It will be consistent with what the Fed is looking to achieve. And as a result of that, it could weaken the dollar. So we also saw the Empire State, or basically New York Manufacturing Index, coming at a huge negative. This was earlier in the week. I can track this easily. This is Empire State Manufacturing Index. It came in at negative 19.0, basically indicating that the New York State manufacturing is entering into a recession. And now we are expecting yet another data point in manufacturing, and this is a Philadelphia Fed Manufacturing Index. So in the previous reading, it was negative 13.5. We expect a slight improvement to negative 9.8. But if it's lower than expected, then this will be quite negative. So for manufacturing indices, I expect them to impact majorly the Dow, which is the industrial sector. So if manufacturing is slowing down, then the Dow tends to slow down at the same time. And of course, we know that overall weakness in manufacturing is basically consistent with what the Fed is looking to achieve. So in that case, also a weaker dollar. So those are the key highlights for the day. And of course, outside the economic calendar, we also have more news incoming. Early this morning, we heard the Bank of Japan announcing another 200 billion bond purchases. And this is quite a huge challenge. So if the Bank of Japan continues purchasing bonds out of the open market, and this is corporate bonds, then in this case, we expect more money, or more Japanese yen to be flowing within the Japanese economy. And as a result, it should be having a weakening effect on the JPY. So we expect a continuation momentum upwards on the USD JPY currency pair. So from the charts, this is what we are looking at. I'll start with the dollar index, which has been struggling to form a new high. So we saw the market forming this high here early in the week, then attempting to go up. Yesterday closed through the high, formed a new high, and now we are seeing the momentum falling back downwards. So with such a strong dollar over the week, you just don't look at today. We also look at yesterday. It was Wednesday, Tuesday, and Monday. Then overall, we can say for the week, the dollar has been quite bullish. So as a result, you expect this dollar to be strengthening against the pound. But from what we are seeing here is that the pound has been quite resilient, especially along this trend line. So if you go to the 4-hour chart, this is what we are looking at, a market that has been quite bullish for quite a period of time. So from all the way back in October last year, and if we were to zoom out further, you'll notice that the bottom was in September last year. There's been quite a strong accelerated momentum towards the upper side, where the pound has been regaining against the dollar since the COVID days. And as a result, we saw this channel dropping all the way down. We had a double bottom formation. You can see the first bottom being formed here, and then the second bottom, and the market has always been struggling to get back to the neckline. So from here, if I was to remove all these accumulated bias or accumulated analysis that I've been doing over time, then you can see what's happening here. So I'll try and show you what I'm talking about. From this point down to this point forms the first bottom. Then from the neckline here down to this point forms the second bottom. So if we complete the entire pattern, basically shows us that we have a double bottom in formation, and there's a potential rally where the market could complete this double bottom along this trend line, which basically implies a reversal pattern on this bearish channel and potentially some bullish momentum. So as I've been saying over the days, is that the Bank of England is set to continue hiking interest rates in the foreseeable future until inflation gets back to their target of 2%. They're still behind on that goal. So investors are currently betting that there will be more momentum of the pound gaining against the dollar. So as you can see, our neckline is pretty strong, has been tested a couple of times here. That was like 4 times of tests. And now the market formed this low and then another low, and it was unable to form lower lows from this point onwards. So with this double bottom formation, there's a good potential that the pound will continue to rally and get back to the neckline. So this potential seems highly likely, especially considering the price action pattern. So for Euro USD, of course, with the strong dollar, we are seeing the dollar strengthening against the euro. So from the 4-hour time frame, this is the kind of formation we are having. So I'll try and remove everything here. And then I zoom out on this chart and we can see what's currently happening here. So it's a market that is basically losing momentum. So if we were to use this as a guide on the direction that the market is taking, and then we use the most recent lows here, you can see that this seems to be the overall price action pattern. which is basically a falling wedge. So from the daily time frame, you can see that there is also this particular pattern here. The market is trading along this channel and also along this area here, which basically forms a pretty convincing idea that the euro is following this particular path. So with this as assumption that the euro is following this path, then you can see from the forward chart that there is still more room for downside momentum, perhaps to this area right here. So it's a technical play towards this support here. So if the dollar continues being strong, then the area that we'll be more concerned about is well within limits or within sights. So that has been acting as a strong support area. And if we put a price to it, then it would be somewhere around this area. So it's a zone, it's not a very specific price. So around 1.08409. So we could be seeing the euro continue to put momentum further back downwards. However, for the time being, that is for today, we are seeing that the euro started with a weakness before getting some form of recovery and erasing all the early morning losses. And now, as we enter into the London session, there is quite a number of takes. So looking at the last 4 days, Monday, Tuesday, Wednesday, Thursday. Sorry, this is Monday, Tuesday, Wednesday, Thursday, and Friday and Thursday last week. We are seeing the market consistently forming lower highs. But then if you look at the lows, they are keeping on getting lower. So there is that opportunity where the market could retest this particular trend line, and that would present a short selling position. So as per now, we don't have evidence of that. So there is a good chance we get to see the euro going back up to test the upper trend line. So the upper trend line is not very far off. So I don't expect much of a momentum from here. So if you were to use this as a guide, then you can see that the upper side momentum may not last for longer. So the volatility is just getting smaller and smaller. So from here, perhaps a slight momentum upwards, get to this area and then back down, and then we continue trading along those lines. So as for USD JPY, it has been extremely bullish, and I've been very adamant on this one. So clearly, with the Bank of Japan even buying more bonds, then the bullish momentum on USD JPY becomes clearer. And of course, the central bank policy divergence, where one central bank is continuing with higher rate hikes, creating a carry trade between the two central banks, where on one side, the bonds in Japan are yielding much lower. The interest rates in Japan are negative 0.1%, while the US is at 5.5%, which basically creates a potential difference, leading to a flow of funds towards US rather than towards Japan. So while equities in Japan have been quite resilient with the stimulus currently happening, equities in the US have also been doing the same, but then the bond yields, especially the short-term ones, are quite lucrative in the US compared to what we are seeing in Japan. So from the 1 hour time frame, we already had the market attempting to form higher highs, and now it's presenting us with yet another opportunity. So remember what we said, whenever you have this kind of momentum, the market pulling back downwards, is creating an opportunity for you to benefit when the market continues with the eventual rally as a result of the divergence between the central banks. So this is very much welcome. So whenever I see this happening in this chart, especially from the open of the day, further back downwards. So at some point, it will create an opportunity for us to go long. So for a patient trader, all you have to do is to wait for evidence that buyers have entered the market and then look for an entry going upwards. So the last time we had this, it was a slight, but eventually it led to a higher bullish momentum. So in this case, we have this bearish momentum, but I would be very patient looking for positions to buy in USD JPY. So as for USD CAD, we are seeing a continued momentum higher. The dollar is continuously gaining against the Canadian dollar. But then as it keeps on going, then we approach higher levels that may imply that we are headed into a resistance level. So from here, if you look at the most recent highs and then you map them, then it seems like we have a break. So the market broke this particular area, kept going up. We are not yet to a resistance level. So if the dollar remains strong for the rest of the session, then this might be a nice target, which was a good high about a couple of months ago. So from the 4-week chart, from the weekly chart, this is what we are seeing. So if I remove all this noise, then you can see it's a very strong bullish momentum. But then the higher it goes, the higher the likelihood that the market will change direction. So as per now, we don't have an immediate target towards the upper side. So if I was to use anything, maybe I would use this area here as a potential target. So I'll try and thin this one. So if these are potential targets for USD CAD, then we know that any bullish momentum would be met with strong resistance around this area. But then in the short run, we also have this previous high price, which may be acting as today's support. So these previous decision points where the aggregate or the average market participation turned from bullish to bearish, market was going up, found resistance, went back downwards. And now this level has been breached. As the market goes back to retest the area, then it presents some opportunity that we could be seeing the price dropping further back downwards towards this area. So these are key potential for USD CAD, especially if the dollar index continues being weak for the day. However, on the contrary, if the USD CAD moves further upside, then we already know where to target, which is just close by at 1.35711. So moving on to gold, we know that we have been experiencing an increased selling pressure. We had this triangle forming a couple of days ago. The market shot down on some news announcement and then reversed immediately, but did not hold out onto the momentum. So the speculation was that we would see 1914 and 1929 potentially. However, gold rallied yesterday and then dropped all the way back downwards as a result of the FOMC meeting minutes. But then from this level, there was a very important level that was calling. So whenever there is a key support level, or a resistance level, then it often tends to act like a magnet in the markets. So this area here, I want to map it right here. So this was the lowest price that we saw in June. Then the market was dropping consistently up until it got to this level. So while we were looking for bullish positions at around this area, this level was acting as a magnet, basically drawing prices towards this area because there was a lot of hidden liquidity around this area. So as a result, we saw the big drop happening all the way down. And then once the market got to that area, there was a complete loss of momentum. You can compare this average size of candlesticks when the price was going down. But then when it got to this area, you can see the candlesticks are much smaller, a very strong tail towards the lower side, indicating a rejection of lower prices, and then eventually a big jump early this morning. So 2 hours ago, we saw this big spike happening, and now it's very convincing that buyers have entered this market, and there's still that potential that we could be seeing some further upside happening in this chart. So the immediate target remains 1900 or 1902. And if the market breaches this area here, then we resume the previous targets of 1914 and of course further upside momentum towards 1929. So for the Australian dollar, despite having some losses after the job market report, we are seeing the Australian dollar being quite resilient and attempting to make a recovery. So from the daily time frame, you can see that we had a break here where the Australian dollar was losing to the US dollar. So it has been quite a consistent number of weeks where the Australian dollar has been weakening. But as you all know, this pair tends to move in what we describe as swings. So maybe we are approaching the end of the bearish swing and potentially the beginning of a bullish swing. So in this case, if the market broke this area and may go back to retest the area, then the idea is that the price could rally back and get to this particular trend line at 0.64575. So there's also an emerging trend line if we were to use this as a yardstick. And from the lower side, we can see there's some form of try and zoom out here. So from all the way back, you can see that the market has been following this path. So try and zoom out and then make it as accurate as possible. So we only have one outlier in this trend line. So every time the market has gotten to this trend line, it has eventually bounced towards the upper side. So with this in mind, you can see only one outlier where the market attempted to break lower and failed. And now we can see the market bouncing from the same level and heading towards the previous resistance. So there is a good chance the market could rally towards the upper trend line, and our key target would be 0.64575. So US equity indices are on a third week of losing momentum. So first week here, second week, and now the third week. So we started with a very strong momentum upwards, but as a result of getting to the resistance, the market changed direction and dropped back downwards. We eventually got to our target yesterday, and now the market is bouncing strongly towards the upper side. So while on one side, we understand that this is a bearish channel, then we basically extend our trend line here towards this low here. And now you can see that the market is bouncing and headed back higher. So we have already hit the target towards the lower trend line. And now it seems like the swing is changing and moving back upwards towards the upper trend line. So this is my entire thesis for today. We could be seeing some further upside happening with the NASDAQ or the US Tech 100. So the Dow has been the most resilient one after forming again last week. So the last 3 weeks, we had a sell-off in the Dow. Then the following week, it closed higher. Notice the opening and the closing. It was a higher close. Then this week has been extremely bearish. So there is a good chance we'll be seeing a retest of this particular trend line. So if we continue seeing bullish momentum, then I expect the Dow to at least retest this area here at around 34,901. Then for the US 500 or the S&P 500, I expect a very strong correlation with the NASDAQ. So some strong sell-off is expected for the day. So we are already, not sell-off for the day, but for the week. But we're already seeing potential, what is potentially looking like the weekly low. So the weekly low could be the price action that we saw just yesterday and early this morning. So trying to fix this trend line here. So I'm hoping that this is quite accurate. Then from this other edge, we are seeing the market forming some form of resistance along this area. So from the 1 hour chart, this is how it looks like. So we already saw the market dropping sharply, getting to the lower trend line, and then finding some bullish momentum. So perhaps today will be a bullish day for the S&P 500, and we could see the market making some form of recovery. But keep in mind that this is the third consecutive week. The S&P 500 is losing here. So from the trend line here, I remember mentioning this, we are seeing the market forming a break that hasn't been broken before. So this could imply a change in trend, and the equity indices basically start retracing or basically making what we call a market correction. So it's the same thing for the NASDAQ. So I remember showing you guys this and the good buys that happened along the way. And now the market has broken towards the lower side. And what we are seeing is a sequence of lower highs and lower lows. So in this case, we have just seen another lower low, and now the market is bouncing towards the upper side. So we don't expect it to break the previous high, but at least for the day, we could be seeing some further upside momentum in the NASDAQ 100 index. So as for Brent, this is what we have been experiencing, a strong bullish momentum that lasted about 8 weeks. And then this seems to be the first bearish week in quite a long period of time. So the market started off with a very strong bearish momentum. Monday, Tuesday, Wednesday, and now today, it seems like the market is attempting to form some form of support. So the previous low was just here. So this was the lowest price according to this swing here, swing down, swing up. And now the market was dropping quite sharply, but now it's seemingly forming some form of support and attempting to make some form of recovery. So if we continue seeing a weaker dollar in the market, then it could be a realistic thing to look for a bullish position. If you look at this 2-4 candlestick compared with the previous two, then it indicates a stronger bullish momentum compared to the previous bearish momentum. And this could indicate some further upside momentum. So we don't know yet. We may have to wait until the 4-hour candlestick closes But for now, it seems like things are changing direction, and we could be seeing some further upside momentum happening in Brent oil. So as for European equity indices, this is what we are seeing. Markets hitting a very strong support here and reversing. So from the 4-hour chart, this is how it's looking like. A market on a big swing downwards gets to a major support level and then reverses immediately. So from the candlesticks here, we are seeing a strong momentum upwards, long tails towards the lower side, indicating a set of rejections. So you can see it happening here and then here. Then some form of liquidity grab, and then the market reverses. So some further upside momentum is expected for the French 40 index. For the Euro 50 index, it's a similar thing. You can see the long tail towards the lower side, long tail, a liquidity grab, and then a reversal. So also expect some further upside momentum for the Euro Stocks 50 index. And for the UK 100, which is the FTSE 100 index, it seems to have been the most bearish one. But now today we are seeing some bullish momentum coming into the market. So from the 4-hour chart, this is how it's looking like. It's not a major support or resistance level. I have seen major support and resistance levels. So yes, we have not completed the swing with the UK 100, but then sometimes in between, you'll see some of these corrections happening after a big sell-off. So Friday, Monday, Tuesday, Wednesday, Thursday. So now we are seeing some form of recovery. So in this one, I would be patient. Doesn't seem overall bullish to me. This is not a support area. So in this case, I would still be projecting that the market continues further back downwards. So in this case, even if the market is pulling back upwards, I would be very patient waiting for a potential market entry point where maybe the market eventually exhausts the bullish momentum, and then we look for short selling position. So my idea would be to look for an area such as this one, look for signs of entry, signs of bearish entry. And if you see bears coming into this market, then you look for a short selling position. So that's it for the day. Seeing the Bitcoin price has been jumping further back downwards. So as we've been watching, these areas have been quite resilient for Bitcoin. So every time the market got to this area, I found some good support. So after the big drop downwards here to sub 28K, the lowest, sorry, not sub, because the low was 28,340. So now we are seeing the market jumping downwards. I still expect this to be some key level support where we could enjoy the market getting back into formation. So there is a good chance we could be seeing Bitcoin price make some form of recovery. But if the correlation with the US equity indices is anything to go by, then the big bearish momentum could also be happening in Bitcoin. So last week was pretty much bullish after the big jump and then some pullback. But this week has been extremely bearish, but at some point, I expect this market to show some support. So you can also observe that we are testing a previous high here. So this was the previous high point of 28,445. So it has already been tested, which is now acting as support. So potentially, we could be seeing Bitcoin prices reverse and start moving upwards. So now I'll be checking to see if there's any questions. Yes, I'm getting quite a number of questions. This is quite a big number of questions. Why is housing construction starts crucial to either jurisdiction, US or Canada, or say Britain? Or rather, what do investors look for in the report? So housing market conditions are a key indicator of economic health. They also take a big weight in the calculation of CPI or Consumer Price Index. So housing market trends tend to be a leading indicator of where an economy is headed. And for instance, if you look at 2007 to 2008 global financial crisis, it basically started with people being unable to pay their mortgages. So what we are seeing here is that the sudden rise in interest rates between March last year in the US to the current level, it has basically increased the mortgage payments, and this particular sector is stressed. So investors are keenly focusing on the housing construction starts to see how the construction is able to meet demand. So population in the US, Canada, and other economies is continuing to rise as usual. And of course, the demand for housing is also continuing to rise. However, if there's no matching construction, if construction is not matching the demand, then the resulting effect is that housing prices continue rising because there are fewer houses and a higher population. So in that case, we continue seeing higher housing prices, which basically reflect on consumer budgets, eventually leading to higher inflation. So that's a big concern right now, and that's the angle that investors are looking for, at right now. On the other hand, if the economy is not stressed with high interest rates, high inflation, when we are looking at construction, we tend to think of construction as a big employer in any economy. So construction tends to be labor intensive, ranging from distribution of construction materials, construction spending, as well as the number of people are hired in construction projects. And this basically is tends to be very positive for an economy. So a good example would be China. Over the last 5 years, they had a massive construction sector, which led to a very high number of jobs created, which strengthened the economy and of course production. But now construction is failing in China, and with key real estate companies being unable to honor their corporate bonds, it's becoming quite a wide-scale problem in China. So as for the US, it's also becoming a huge problem because mortgage payments are on the rise. So I don't know if I'll be able to answer all the questions, but I'll try my best. Why is housing gold is bringing thousands of confusions. Please help me analyze it and show us the way with gold. I already showed you. We just had to grab that liquidity, which was represented in the June low. And now that you already grabbed that, then the direction seems to be upwards for me. So I could be wrong, but if this plays out, then it could be a swing trade where you enter at a really low price and then get to enjoy some bullish momentum for a couple of weeks. So I've already shared my thoughts on gold. Is the BOJ going to act swiftly from the psychological level breached by the meteoric rise of the king dollar? I think they are trapped. They are currently trying to rein in on the yield curve control program. Bond yields are at multi-year lows in Japan, and in order to continue holding 10-year bond yields somewhere around 1% or below, they have to keep on buying more bonds. And as a result of this, it basically implies a weaker Japanese yen, so that remains the consensus. What should we expect now that the 10-year treasury yield is at a historic high? So major central banks around the world are basically selling US bonds. China is selling, Japan is selling. Investors, major investment banks are basically selling these bonds. And basically by selling these bonds, it increases the supply of dollars. So in this case, we expect the dollar index to take a step back. So while this is not a one-day thing that could happen today, it may take a month until we start seeing the full effect. And of course, with this happening, we could be seeing some rotation towards assets that tend to be safe havens or that are resilient. So a rotation to hard assets could be happening right now. And this basically means investors buying more gold, buying more oil, as well as infrastructure projects. So today, many pairs are bouncing along trend lines. The pain is there are at times market grabs the liquidity along these lines. How do you balance between getting into the game and avoiding a whiplash? I think patience is key. Patience is always key. So for instance, we saw the big spike in gold downwards. I think I can demonstrate this. So gold forms this bearish wedge, and then it jumps all the way down. So if you are not patient and you jumped, oh, there's a nice breakout, let's go selling, then you would be very amazed when price breaks towards the upper side. And then after it breaks to the upper side and you get overexcited, now we are going up, go for a buy trade, then you get humbled as the market moves in the opposite direction. So in this case, we had a clean break of this area here. And now it seems like everyone who was anticipating look at the sequence of 3 strong bearish candlesticks, indicating that we are headed for a break and the market is moving downwards below 1892. So eventually, for anyone who got overexcited about shorting gold and they enjoyed all this bearish selling momentum, they could be giving it all back to the market when the price eventually reverses to the upper side. So remember, markets are not unidirectional. Whenever there's a very strong momentum downwards, then eventually there will be a reciprocal momentum in the opposite direction. So in this case, my overall expectation is that gold forms some form of pullback here. Even though it may not rally all the way up, at least for a couple of days, we could be seeing gold forming a rally here. So trying to look if there's any more questions I haven't answered. Keep up the great work on bullish banter. I always enjoy replaying the same and even sharing to friends. So thank you very much, Apollo. For those who are new to the session, we have a podcast called Bullish Banter Podcast, where we discuss various macroeconomic events. We recently discussed what's happening with Japanese bonds, what's happening with the US real estate sector. We discussed what is happening with the tech sector in the US, what's happening with the situation in Niger, the war between Russia and Ukraine. We discussed energy, Chinese recovery, and all that. So all that information is available on the Bullish Banter podcast. You can check it out on the FX Pesa YouTube channel. Just click on podcast and go to Bullish Banter. You can go and search on Spotify, Google, as well as Apple Podcasts. So yes, we saw this feedback about adding context on dates. So this is currently being implemented. Thank you for the feedback. New to the Forex ecosystem, any 3 tips for beginners? Yes. Tip number 1, learn. Tip number 2, learn. Tip number 3, repeat. You have to learn fast. You have to invest time in learning about trading, and don't just do it in 2 weeks and just deposit a huge amount of money in your account. Make it gradual. You can even start your live trading account with $100. But then as you trade that $100, be a little bit reserved and put as much effort as you can in learning how to trade. For my information, where Fed minutes waited after FOMC decision, Powell clearly gives the thinking behind the decision, which most times is reflected in the minutes. Or am I missing something? So it's the finer details when they give an overall report. Remember, they normally have a 2-day meeting. So by the time you're seeing the Fed announcing interest rates, let's say on a day like Thursday, they have spent at least a minimum of 2 days discussing all the economic conditions and looking to basically make a decision. So once they make that decision, everyone in the markets, including the government, is waiting on that report. So once they make that report, they need to take time to reflect on what they discussed and then streamline the minutes to show what they discussed. So it's a way of creating some form of forward guidance so that the market doesn't react immediately, but then gives people time to think through and basically stabilize markets. So the Fed previously used to make blanket announcements, which would cause extreme volatility in the markets. And for them, they have a mandate to stabilize the markets. So they try to drag these as long as possible. So for instance, when they started hiking interest rates in March, they didn't say they would hike to 5.5%. They would just say we are going for a 25 basis point hike. We are hoping inflation will drop. But eventually they knew that long term they would have to accelerate interest rates to much higher levels than anticipated. So is it advisable to trade gold with a small account? No, it's not advisable. Gold is extremely volatile. It can move like 4,000 points in a day. If you're trading 0.01, that would be like $40, just trading the minimum. So if you have a very small account, then you should try and trade less volatile assets. So thank you very much, guys. Thank you for your time, and I hope to see you on the next session. Remember, today is Thursday, so we are going to be having another session at exactly 8 p.m. So enjoy the rest of your trading day. I wish you a happy, peaceful day.